So over the last few months and weeks, I've been spending approximately a week in a financial center, such as Hong Kong, Singapore, Sydney, London, and others. And in the process of spending that week in each of those financial centers, I've made sure to meet with the central bank, the country's exchange, the country's clearing and settlement system, the top 4 or 5 or more commercial banks, and some of the top buy-side asset management firms. These meetings have given me a view of what is required to make a transaction work in these different financial ecosystems, and also how a transaction can work across these financial centers, which is where the real opportunity is, in my opinion. The things that I found is that the problems are universal in the fact that transactions need data, transactions need connectivity, and transactions need to be compliant. It is actually these problems that Chainlink has been successfully solving for years. It's just been in a slightly different category of contracts, such as Web3 and DeFi, with certain specific pieces of data like price data. But Chainlink as a system is constructed in a way that it's flexible enough to work with all kinds of data and to create connectivity across all kinds of chains. So right now, the world we are really inhabiting is a world where the Web3 market, the DeFi market, the real-world asset market in the public chain world is continuing to grow and continuing to be more and more heavily driven by high-quality data from Chainlink, high-quality connectivity across chains from Chainlink CCIP, and high-quality computations like automation to make the contracts work. About 80% of those technical problems are reapplicable to the technical problems of banks and bank private chains. Now, all of those different groups I mentioned before, all of the banks, all of the asset managers, the exchange, and in some cases even the central banks, will all have their own chains. In having their own chains, they create a kind of technical fragmentation. This technical fragmentation then creates a fragmentation of liquidity, such that each bank, each asset management firm, each exchange having its own infrastructure fragments the liquidity, the purchasing power of its user base into that infrastructure, but not into a shared infrastructure. And transactions can only happen in a shared infrastructure model. All of these chains and all of these transactions need a set of standards in order to happen. So in order for you and me to transact, we need a settlement price that we both agree is a reliable, manipulation-resistant, accurate settlement price. That's one of the first things that Chainlink provided to the Web3 DeFi community and is now actively providing to the capital markets community. Beyond that, once we reach settlement, we then need to transfer assets. Your chain would have stablecoins, and say someone else's chain would have the assets, and you need to do what's called delivery versus payment. You need to finalize the transaction where the assets move to the one chain and the payment moves to the chain where the asset came from. This requires a cross-chain connection. Now, to even move those assets, you need additional data, like identity data, to comply with basic AML, KYC, and travel rule requirements. So now there's additional data that needs to make its way into the transaction. The real way to think about the traditional capital markets is that it's layers upon layers of systems that have resulted in generating a transaction with certain properties. Those properties is that the transaction has a settlement price, the transaction meets identity requirements, the transaction is able to move across certain rails, the transaction is connected to payment systems that can pay for it to happen. And that is what needs to get rebuilt in the blockchain world. But in the blockchain world of private chains and banks and asset managers, it is being rebuilt by everyone having their own chain. So as everyone has their own chain, they rebuild parts of the infrastructure for how the system works. And then there's other parts, like the ability to inject data, the ability to connect those contracts across chains, the ability to be compliant, that needs to be fulfilled by a shared global standard. And that shared global standard is now becoming Chainlink. Chainlink's data, connectivity solutions across chains. And once everybody is on a single standard, transactions can happen seamlessly. This is what protocols like Swift and Fix and others have done in the traditional world. Those protocols are not able to interface with blockchains. And so the other big part of what we're doing is we're allowing those protocols to interface with blockchains, so their large user base can interface with blockchains for any activity, buying, selling, generating assets, moving assets through the Chainlink interface. So that's the general overview of what's going on. We're generating an infrastructure that is a global standard for data transmission and value transmission between blockchains, and basically creating a set standard under which transactions can happen. A set standard for how data can allow a transaction can happen, a set standard with which data is injected into the transaction to inform the real world asset or allow it to comply with certain legal conditions, and how that transaction can then interact with a payment method. Now, this world is really split up into three key parts. The first part is the asset part. It's the actual asset that's being transacted. This is often called real-world assets in Web3. It's called digital assets in the banking world, and sometimes it's called both things in the asset management world. And the generation of an asset for us is really the creation of what we call a unified golden record. So a unified golden record is a data container. It's an on-chain data container in the form of a smart contract that has both the ownership rights and various pieces of data about the underlying asset in one data container. So the way the traditional system works today is the value transfer method, the ability to transfer ownership from me to you, is in one system. There's just a system of value transfer, that's all it does. And then there's a multitude of different data systems that people are responsible to go to and get the data they need about the underlying asset that they now have ownership over. That is the old model. In the new unified golden record model, what you really have is a single on-chain data container, smart contract, that is both the representation of the ownership and the place where you feed critical data about the asset. So for example, if it's a tokenized carbon credit, is the carbon credit valid and redeemable, or has it been redeemed and therefore invalid? If it's tokenized real estate, does the real estate have any additional debt that's appeared against that asset? If it's money market funds, what is the NAV calculation? What is the valuation of the fund? If it's any other asset, what is the data that can prove the status of the underlying thing, the underlying asset, in a real-time basis? And this is actually one of the basic fundamental problems of the financial markets, is people have assets that they don't understand. And they're not able or not informed enough or not connected enough to data to understand what's going on with the underlying asset. And this creates these big information asymmetries, which lead to things like the 2008 financial crisis. So in the asset world, you're getting a lot of huge benefits, like 24/7, 365 markets, better collateral management, which is a very valuable thing for banks, because if you get to move something quicker and it's worth $100 billion, you can earn interest on it for that additional 3 days when you moved it. So that's very valuable. And you get this better risk management solution in the form of a unified golden record, an on-chain record. That's slightly different than what the RWA world is doing in Web3. In Web3, it's tokenizing a bunch of assets that will be valuable collateral for protocols and for users that want to own it in a tokenized form. And eventually, the capital markets world and the Web3 world will have to merge into a single world. And in order to do that, they will need to be on a single set of standards: data standards, connectivity standards, and computational standards. So on the asset side, Web3 world is kind of innovating in assets at the edges, and the capital markets are repackaging the hundreds of trillions of dollars in value that they already secure. Now, the second component of all this is the payment side. You need a payments method in order to transact, and that payment method in the banking sector has to comply with certain legal requirements. That compliance with legal requirements is basically the gating issue to whether or not that payments method will or will not be used. And if there's no payments methods that meet those legal requirements, then there is no payments method. This is the big thing that's shaking out right now. There's various stablecoin providers that want to become that payments method. There's various banks making their own stablecoins. There's central banks trying to generate central bank digital currencies to fulfill this role of a payment solution against these assets, right? Because even if you have an asset, if you have no stable, riskless form of payment, then transactions generally won't happen, because people generally don't prefer to do asset-to-asset transactions. They prefer to do, here's the value of the asset, That value is written into the smart contract. I know what it is second by second. I don't have to wait a week or a month to value it. And now I can purchase it with a stable, ideally riskless form of payment that isn't exposed to various counterparty risks, technical risks, and other risks, including legal as a risk. That world is now in the process of developing, and Chainlink is very actively working with the various participants there: stablecoins, tokenized cash deposits from banks, private bank money, central bank digital currencies. All those payment solutions are basically fitting into a model where the central bank digital currency, stablecoin, or other payment method is seen as an opportunity by all those groups and a necessity by the people who have assets. And some of them are making assets, like banks, some are making assets and stablecoins, to just try to close the loop on that problem. I feel this is the year where there is an explosion in high quality assets, both in the Web3 world and in the banking world. And there is also a significant increase in the amount and quality of payment solutions that can be used to transact against those assets, which means the amount of transactions and transactional flows is rapidly increasing this year. The question from the point of view of Chainlink, in my opinion, is how does Chainlink enable those transactions? How does it enable the generation of those assets? How does it enable the movement of those stablecoins in a compliant way? How does it connect chains to allow the transactions of assets for any number of forms of payment? And how does it do it in mass, at scale, with those same commercial banks, and possibly even with asset issuers themselves? That basically boils down to making a platform, a robust set of features and tools that can be used to create and manage multiple steps in that transaction. And that is really, I think, the metric against which Chainlink needs to look. That over 10.5 trillion in transaction value enabled so far is a really big achievement, and one of the biggest amounts of transaction value enabled in the entire blockchain industry. But I think the next stage is enabling the transaction to happen basically from beginning to end. So Chainlink will enable the generation of a real-world asset as a unified golden record with a lot of data injected into it to make it a better asset. Then it will allow that asset to be connected to all the different chains, public and or private, that have the liquidity, that have the purchasing power to interact with that asset in a secure and reliable way. Then it will inject even more data into that asset to allow it to be transferred in a way that complies with various legal conditions, so that banks, asset managers, and others can actually purchase the asset and can actually send payment for it. And then after that asset moves onto those other chains, it will need to stay synchronized with data. And in staying synchronized with data, it will retain the property of being a unified golden record, which is once again the key property that we're generating here by merging the dynamic of data and value into a single system, such that you don't need to go get data. You don't need to figure out a ton of data if the unified golden record, if the real-world asset is properly constructed, because the key aspects of the asset's health, quality, risk are all in the ownership receipt that you possess and that anyone else who wants to buy can look at and read. So that's the world that we're in the process of building. We're in the process of building the world where real-world assets are generated as reliable unified golden records. There's a reliable cross-chain connection between hundreds of different chains where liquidity is unified into a single network. You have various forms of payment, everything from privately issued stablecoins to privately issued bank money to tokenized cash to central bank digital currencies. All those forms of payment are also on that network. And the value, the assets and the payments can flow across that network in a way that complies with the legal requirements of all the counterparties. But then there will be huge amounts of value, hundreds of trillions of dollars in value in the banking sector and the asset management sector that will only interact with things once it meets those legal requirements. There has to be a system that allows them to do that. Once you have a network of interconnected chains with high quality assets, with high quality payment methods, with high quality data underpinning all of those interactions in a way that's highly reliable and allows people to comply and do transactions in the way that they have to, I think our entire industry reaches a whole new level. The final piece of the puzzle is really the emergence of secondary markets, where all of those assets and all of those payment methods eventually find secondary markets Some of those secondary markets will be on-chain, some of them will be off-chain, some of them will be on-chain in Web3, some of them will be on-chain in the bank chains. The important thing is that all of those secondary markets on all those various chains can also interact with each other over a secure cross-chain connection that is able to move both data and value. And this is one of the key points that I think Chainlink significantly excels at, is there are systems that can provide data and there are systems that can do cross-chain. From what I can tell right now, there are no systems that can allow you to generate an asset with the necessary data on the first chain and to generate it in a way that as the asset moves to other chains, it will continue to receive the critical data on a synchronized basis, right? So as it goes to the second chain or the third chain or the fourth chain or the fifth chain, keeping the asset in sync with the data is actually one of the key components of making this work across the multitude of chains while still having a unified golden record. And in addition to all that, in addition to the ability to provide data to the asset to generate it, the ability to provide more data for it to flow in a way that complies with various legal conditions, the ability to have it move across chains against various payment methods, and the ability for it to stay synchronized with data as it goes from chain A to B to C to D to E, you also have a very big kind of traditional legacy existing infrastructure problem that is not going to go away. And this is where our work with Swift and other key foundational financial industry protocols is very important, because banks, asset managers, exchanges, CSDs, central banks, all these groups are not going to replace their existing infrastructure. What they're going to try to do, and what they're already in the process of doing with us in some cases, is layering blockchain infrastructure on top of their existing infrastructure in a way that it can interface efficiently. So their basic calculus is, how do I efficiently use my existing signing key solution, my existing database, my existing infrastructure, my existing workflows with blockchains as a transactional mechanism, whether it's on the asset side or on the payment side. And this challenge being solved will rapidly accelerate the adoption by thousands of banks. Because the alternative for them is to natively integrate into hundreds of chains, learn hundreds of chains that are not stable, that constantly change, that ship breaking changes, which is something I don't think they'll just even be able to do. And they also realize this. So the other big thing that's being provided by us in these meetings and these conversations and some of these ongoing implementations is the blockchain abstraction layer within CCIP that allows any off-chain system to interface with hundreds of different chains through a single standard, a single methodology that leverages their existing signing keys, their existing infrastructure, to then affect on-chain events on hundreds of different chains. When you put all of this together, what you find is hundreds of thousands of chains with all of the world's value on them, with more advanced smart contracts like RWAs, like various lending protocols, derivatives protocols, secondary market exchange protocols, all of which require larger and larger amounts of data to function, whether that's to do the transaction at all, or whether to comply, or whether to do any number of steps. And then you have a need to connect all those hundreds of thousands of chains into a single internet of contracts, similarly to how TCP/IP connected many different technologies, separate technologies, into the internet, into the shared global internet that houses both banks and fintechs, startups, and largest institutions in the world. They're all on a single internet. So that's really what I think we're involved in doing at this point. We, as a community, have done a really great job with Web3, powering the majority of DeFi, powering the most RWA implementations, powering the most proof of reserve implementations because of the security and the quality of the Chainlink system and the different parts of the protocol. And that's a great achievement. That's a great thing that I'm very proud of and very, very grateful to all the people that I have the luxury of working with and pleasure of learning from, and also the community which has done a huge, huge amount of effort to get us to this point. So that's a great place that we've gotten. But in getting to that place, we have kind of earned the right, we've earned the position from which we can now become the way the rest of the world operates as it transitions into this new blockchain format. That's the fundamental thing that's really happening, is that every 40, 50 years, you have a reformatting of how all value exists. The last reformatting was from paper into digital, into the internet. And that was once in a multi-lifetime opportunity. Now, that is happening again. So now, after 40, 50 years, all of the world's value is being reformatted into this blockchain format for everything. Real estate, equities, commodities, insurance, gaming, global trade, all of it. Because it's a fundamentally superior way for transactions and peer-to-peer and digital relationships to operate that is guaranteed rather than probabilistic. Right? So it's just a superior format for how value and digital relationships are managed. In the process of this transition, there's a lot of surrounding problems. How does data reach the value? How does the value move across chains? How does all of this stay synchronized with the existing infrastructure of the world? How does the value on the existing infrastructure migrate into this new format? How does all of that interact in more and more advanced ways by proving more and more things about the underlying value to the user in a cryptographically guaranteed manner, justifying the blockchain format as a better and better way to have value and manage transactions? These fundamental problems are basically the problems that we now have the opportunity to be the group of people, to be the community that solves these problems. We have gotten to that point through over 7 years of very hard work, together with some of the smartest people in the world, some of the best security experts, some of the greatest engineers, and some of the most committed, thoughtful, helpful, great community members. But now we have this chance to be the way the world works for the next 40 or 50 years as this big transition happens. And that, I think, is the really exciting thing for me. And if that transition happens, I think society gets two very big things. The first thing that it gets is, in developed countries, everything works much, much better. Information asymmetry goes away in markets to a large degree because information is in the asset and people can't game the system. Systemic financial booms and busts get smaller because people can make more rational decisions. The whole financial system works better. Everybody has access to more assets. You can buy a fractional piece of a hotel or the restaurant you go to. There's a lot of exciting thing that happens in developed markets, both for how the system structurally works, for society's sake, and the new kinds of products and things that become available. And then in emerging markets, we arrive at a world where people go from 0 to 1, where they didn't have a bank account, they didn't have an ability to buy insurance, they didn't have an ability to participate in the global marketplace through global trade, and now they have all of those things because they don't need to rely on their legal system. They can now rely on the cryptographic guarantees of smart contracts as an alternative system of contracts that is sufficiently easy to use, sufficiently secure, and sufficiently globally connected that they can transact with other people and they can hold value in not a bank account but a stable coin or a central bank digital currency or a tokenized deposit of some kind, and they can now change their entire economic life as a result of that in ways that people in other countries take for granted. So really, I think what the telecommunications companies and industry did for communication and what the internet did for education and information transfer is what blockchains will do for people's economic future. That is really the thing that over the next 10, 20 years, I think we'll arrive at if all of this is successful. So I'm going to continue meeting with a lot of these ingrained large institutions that have all of this value. I think Chainlink, due to its security and reliability and all of its great features and properties, will continue to be the global standard in Web3. And then if it's the standard in Web3 for how price, data, transactions work, and it's the standard for how price, data, and various transfers and transactions work in the capital markets, we actually arrive at a world where those two worlds can interoperate pretty seamlessly. And once again, we form what we call the Internet of Contracts in that case. So this is the big body of work we're involved in. Very grateful to be working on it with many great people, including the people in our community, and very excited to see where it goes next. I think over the next few years, we're really on the cusp of something quite big, because I'm seeing the entire world moving in a direction where, just like DeFi couldn't operate without what Chainlink provided in a secure, reliable way, I don't see how this big transition can happen without Chainlink providing what it provides in terms of the data, identity, connectivity, and all these other properties that are needed for this transition to happen. So I think it's a very exciting time, and really looking forward to doing it with all of you. So thank you.